Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, and as always, I am here from Verified Investing Studios. It is Friday morning. You might think it's a quiet day, but we do actually have some volatility out there. The VIX spiking in the overnight on stuff going on in Japan as well as France, and I'm going to cover it all for you so you are aware. You know the trading levels and everything else. So let's get right into this action here. And right in we go. So let's take a look at the S&P futures right off the bat. What's the S&P doing pre-market here? We are seeing a little bit of weakness, not a ton of weakness, but nonetheless, considering the big players out there have been controlling this market, the I shouldn't say 1 trillion, but the $6 trillion companies out there that are rated, again, anywhere between 1 trillion and now over 3 trillion, they've been controlling the NASDAQ 100 and the S&P 500. But this morning, we are seeing some weakness. This was where we closed yesterday. We've rolled over into the open here. We are bouncing just a little bit. I want to lay out exactly what's happening. So, a couple things happened here. Number one, in the overnight, the dollar yen, which again is the dollar in relation to the yen, had this wild ride. Now, again, this for the currency markets is like an earthquake. It is major. Now, what happened here? Well, the Japanese central bank said they were going to reduce their bond buying, and in addition, they were going to start to cut down on their balance sheet. They were going to start to lower their balance sheet. So this combination created volatility in the overnight, and it starts to make investors become concerned about the global financial system, because this is a change, and this is a big change from the Japanese central bank here. So again, overall, we've seen this wild move on the dollar yen. We know that the dollar yen kept going higher and higher and higher for so long that the Japanese central bank had to intervene just about a month ago. But again, this is something that is making the markets uneasy this morning on a global basis. Now, to add to this, the global insecurity, if you will, if we take a look at the CAC here, which is the French stock market, we basically have seen, this is the daily chart of the CAC, right? Look at this rollover. This is just this week, down 6% this week. And if we look at where this was just a couple weeks ago or a month ago, it was even higher. You've seen a big drop off and roll off. Basically, what's going on here is you have a lot of political upheaval going on in France. In fact, one of the French officials was asked, could this cause a financial crisis? And the answer was yes. That's rare for an official to say. Nonetheless, we have seen, again, just today alone, look at the drop on the CAC here, and yesterday as well, as the upheaval continues. So what we have is this scenario where things around the world are starting to shake. And the U.S. is still relatively stable. We've seen inflation starting to come down, although the jobs market does look like it's weakening after that initial claims number yesterday and some of the most recent data. But that, again, pushed the VIX. If we look at the VIX in the overnight here, which is the volatility index, it did pop it, although it's come in just a little bit. So if we look at the VIX here, look at this move in the overnight. It's come back in as things are stabilizing a little bit, but this is people buying protection for their portfolios, mainly institutions. So institutions running that VIX up, buying volatility. Essentially, if volatility spikes, the VIX goes up. Essentially, if fear spikes, the VIX goes up. If fear remains calm or no fear out there, then the VIX comes back in. So again, people are buying protection here on the market today. All right, so let's think about this logically. What do you guys think would happen? Where would money go if there's fear globally? And the answer should be safe haven assets. What are safe haven assets? The US dollar, bond market, as well as gold. Well, let's take a look real quick here. Let's look and see what's going on here. If we look at gold, and we'll cover this a little bit more in depth, but we can see gold is spiking $30 on the morning session, still putting in a bearish pattern here, but nonetheless, it is starting to kind of move up today. That is, again, safe haven, money rushing in from global areas and even the U.S. into an asset that historically has been a safe haven asset. By the way, is Bitcoin spiking today? The answer is no. What does that tell us about Bitcoin? It is still not considered a hardcore safe haven asset yet. I do think down the line it will be. It just is not at this point. Okay, what else is moving here? Well, the bond market, right? So the bond market should be doing, you should see an uptick in demand for bonds. When bond demand goes up, yields should be able to come down a little bit, right? Because the more demand for bonds, people can offer a lower interest rate on those bonds to get people, and they'll still buy those bonds. So let's look at the 10-year yield here real quick. If we flip over to the 10-year yield, you do see that bonds are, or yields are lower, which tells us that demand for bonds are upticking. We were below 4.2% on the 10-year, but we are seeing a little bit of a bounce, which tells me, again, watching this and just seeing that little bit of a bounce off the lows is telling me people are starting to relax a little bit about this instability. They're calming down from these overnight fears. All right, so again, either way, that's a big drop. And look at that again. I love showing this chart because it's a great example of what I teach you guys, which is the return to the scene of the crime, right? You had the breakdown, which confirmed, then the retrace, and then what happened? And I drew this, literally I had this arrow on even before any of these days occurred to the downside, saying that this is what generally probabilities dictate should happen to the downside. All right, so we have that going on. What else should be moving? Well, the dollar, right? The dollar is a safe haven asset, so is the dollar going up today? Let's take a look. See what the DXY is doing, and I think that's a resounding yes. The US dollar, there's your green candle for the day. And what's amazing about this is that just 2 days ago on the CPI data, we saw the dollar collapse down, and now we're even higher than it was. And what's even more amazing, generally when you see the dollar up, what does gold usually do? Gold usually goes down. We're not seeing that, right? Because it's telling you it's safe haven demand. Now, if the dollar was down today and gold was up, you'd say, okay, there's no safe haven. This is just a normal reaction. If the dollar was up and gold was down, same thing, no big deal. But because both assets are up today, it's telling you it's safe haven demand. Just something little to keep an eye on, and remember how well those indicators can work to kind of guide you to what is going on in the markets. Now listen, this could be a big nothing burger, right? And what do I mean by that? Well, if Nvidia's up today and Apple's up today and Microsoft's up today, markets are going to be up. It's just that simple, because that's the world we live in. We live in a world where literally 6 companies and really almost now 3 companies control the entire market. Now listen, they don't control the entire market, but the meaningful market they do. And what's crazy about this, I think I showed you guys this yesterday, but the Russell 2000, which now pre-market is trading below, let's go to the Russell, it's now pre-market down here, even below where it was when we got that CPI news. This again is a chart that has not yet made a new all-time high since 2021. So it's certainly, these 2,000 stocks in this index are certainly not doing that well, right? But again, when you have mega caps that are at these valuation levels, they control everything. It literally doesn't matter what happens to anything else. As long as those 6 companies and really those 3 companies are up, the markets will be stable. Now, the big issue is what happens if something happens to those 3 companies and something bad happens to those 3 companies? What happens then? By the way, do any of us think that anything changed after 08, 09 when it was too big to fail for the banks? Is JP Morgan too big to fail still? Yes. Is Citigroup, is all these other ones, Goldman Sachs? Yes. And you know what? I'll even add more to it. I would say those 6 companies, Apple, Nvidia, Microsoft, Amazon, etc., all too big to fail. So we've gone from an environment where I clearly remember the collapse of 08, 09 and how panicked and scared everyone was, freaking out, banks failing. And we're not just talking about small banks like in 2023. We're talking about Lehman Brothers and some of these other players out there. They were all failing, and it was this big rush in saying we cannot let our system be controlled by so few big players that we have to bail them out. Well, guess what, folks? We're there, and we're there 10x with companies that are too big to fail. All right, I want to show you a chart here, guys. We're going to just continue to go through this. If we flip over to this chart, this is a chart I posted to members of Smart Money stocks and ETFs. It's an absolutely amazing chart here. And what this chart shows us is the difference between, and bear with me, it shows the difference between the NASDAQ 100 equal weight versus the regular NASDAQ 100. So the QQQ versus the equal weight QQQ. This is astounding. And what you're seeing here is that if Nvidia, Microsoft, and all these were just equal weighted, so with every other company in the NASDAQ 100, which is only 100 companies, so they all are big companies, right? They're all like 100 billion-ish, give or take, or greater generally. Then if that was the case, the NASDAQ 100 would only be up 4% this year. 4%. Because the NASDAQ 100, which is not equal weight, right? It's market cap weighted. So companies that are trillion, multi-trillion, they have more weighting, is up 16.5%. We're not just talking about like the difference between 4% and 6% or 4% and 8%. We're talking the difference between 4% and 16%. That is nuts, guys. Now, again, remember, even in equal weight, NVIDIA, Microsoft, and the rest of them are still considered in that. Equal weight just means they're equally valued in terms of their weighting in the index. It is astounding, folks. And this, again, this divergence is the first time in history of this country that we have seen this type of divergence among so few companies. 6 companies. Remember the stats that I told you guys about earlier this week is literally the S&P 500 is 500 companies. 6 companies make up now 32 to 33% of the S&P 500. That means 494 companies only make up 67 to 68% of the entire S&P 500. It's nuts. It's nuts. But it is what it is, right? But this is the kicker, is that when you get instability globally, like something happens in Japan or something happens over here, or what if China invades Taiwan, you are literally setting up for a stock market crash. Remember the flash crash? Maybe some of you guys don't remember the flash crash. I do vividly because I've traded for so freaking long. But basically, everyone was like literally the markets just collapsed intraday. Now, they recovered decently by the end of the day. Everyone blamed it, or at least the big players were like, oh, it was a fat finger trader, right? Like, oh, it was a mistake. No, it wasn't. It was because the system got out of whack and it wasn't properly put into effect, essentially regulated. Well, guess what? You're in that same issue times 100 now. And it literally will set us up. You know, there's a reason why they put circuit breakers in. If you guys look back, they didn't have as strict circuit breakers like 10 years, 15, 20 years ago. They now have stricter circuit breakers where if the market drops X percent, it gets halted for this amount of time. If it drops again, it gets halted for the rest of the day. This is why, because they know that this market is literally on the edge of a cliff. Now listen, the edge of a cliff, it can still continue to go like this, right? I mean, we can still see it continue to go vertical, but at some point, it takes that cliff dive, and they put in circuit breakers to stop it along the way. Generally, historically speaking, and you can look at things like GameStop when it was coming down, they would have circuit breaker stops, you know, halted, halted, halted. It still went down. So again, I don't believe that this will ever save it, but that's the idea behind it. Crazy stuff, guys. Absolutely insane. All right, sorry to go off on all these rants. Whew, Friday mornings, what can you do? Let's take a look quickly here, guys, at the mover of the morning session here. It's Adobe. Adobe, big upside here today on the back of earnings yesterday. Guess what the main theme was? AI, of course. One of the things to point out, though, is if you looked at this chart going into earnings, it was not at the all-time highs. This means, again, in general, it has more probability of going up, in my opinion, versus all-time highs. Now, listen, Broadcom yesterday didn't matter. It was at all-time highs, and it still went higher. So, again, doesn't necessarily matter with the narratives these days. But, again, where are we looking for on this chart? If we go back to the intraday chart, we see it trading at $530, where might be a shortable level on a day trading basis today. So by the way, look at where 530 is right here. And let me get back to my yellow so you guys can see it on the black here. But right there, that's where it's currently trading. So that's kind of cool because it's right at that low pivot. Now again, is there a short there? It might pull back, not for me. Because again, if it's already there, it's already been hammering on that line like a door, right? You're banging on that door. So what I would do is I would play it very cautiously. Fridays are always cautious days for me because if you've had a good week, you don't want to screw it up on Friday going into the weekend. But there's a gap fill right here. It looks like, let me get a price point on that. It looks like that's right around 570, 571. If somehow this goes up to 571, you might see me or you might hear about me taking a little bit of a trade there. The live day trading room, the Apex live day trading room, obviously would be privy to that live trade in our morning session this morning if it gets there. All right, guys. Whew. All right. Let's do our drawing real quick here, and let's get our winner up. Yesterday, we had the 1-minute scalpel, which is Dr. B's amazing course. Let's find out who the winner is today of that course. And we're going to find out here. Then we'll spin the wheel of appreciation, and we're going to get into Bitcoin, and we're going to get into other commodities out there. So let's go. Winner today, folks, is BitBud9871. There you go, buddy. Reach out to Lawton at verifiedinvesting.com, and he will hook you up with this course, amazing course, utilizing the 1-minute chart that literally we make money every day in the live trading room based off this course. It's absolutely amazing. The other thing I'll just mention, don't forget, you got to be a follower of Verified Investing on YouTube or on X. You got one of those two, and you got to be sharing this. So again, you have to be sharing the stream on one of your socials. That gets you to be eligible to win one of these prizes every single day that we give it away. And literally every single day we do these drawings. All right, speaking of drawings, let's go right over here and spin our wheel. Oh. There you go. Smart money stocks and ETFs. I was just talking about that earlier with you guys. That is the giveaway for Monday. 3 months free, $450 value. Again, smart money stocks and ETFs. And again, lots of action in there, lots of charts. I showed you one of the charts I posted to members just a little while ago that just gives you incredible insights, information, and of course, trade signals as well. All right, we'll give that away on Monday. Don't forget again to make sure to share this stream everywhere you can. The more you share it, the more I am appreciative of that. All right, what we're going to do now is take a quick 30-second break just to thank one of our great products on the website, so take it away. Hey everybody, welcome to Smart Money Commodities and Miners. If it's a commodity, if it's a miner, I'm covering it in this service. I'm giving out exact entry and exit prices on these commodities and miners. And basically what you're going to get is almost daily videos of information, technical analysis, data driven. This isn't a service about hype. This is what is the data telling us to clear out all the nonsense from mainstream media, all the nonsense from social media. It gives you literally the data to use to make trading opportunities happen and profits ultimately happen. So welcome again, guys, to Smart Money Commodities and Miners. Come check us out here at Verified Investing. All right, back we come, guys, right into Bitcoin. And again, guys, this is some interesting stuff. Now, you look at Bitcoin and there's almost no movement today. That to me is actually significant, and I'm going to tell you why. The significance here is, again, what it means. So you have the dollar starting to rally as a safe haven asset. You have gold, you have bonds, all that stuff. Bitcoin's barely moving. So again, for me at least, I take that to mean that, again, as of now, and I say as of now because I'm a big long-term believer in Bitcoin, but as of now, it is still not considered a safe haven asset at this point, okay? Now, having said that, what are our levels that I've covered all week long? And again, we've chopped around. It's basically this level here, a daily close below that level right there would be bearish for the chart. And if we go up here, we have a line from this high to this high, which cuts right through this high. I'm going to do my best to draw it here, even though it's not great. And if you get above that, then off to the races, 74,000, and then honestly probably higher. I think, again, this line breaks. You're going to probably stall at 74 and then bust right through it. So we'll watch to see which way it goes. Again, the bias here would be slightly bullish. We'll do a B there. If it gets below here, it's a B for bearish. I guess those are both Bs, so we'll do a minus and a plus here. And then if you get above here, it's like B plus plus plus. Like that would be really bullish. So we're right in the zone here that's still holding on to the slightly bullish sentiment or the slightly bullish technical bias. But again, just know that if you get below there on a daily closing basis, intraday doesn't matter to me. You've been below intraday multiple times. It's about that daily close, and really the weekly close is even more important. All right. Solana. Let's talk Solana here, which continues to kind of stay somewhat on the weaker side. A couple key levels on Solana that are coming into place. This one right below 140 here is going to be technical support. But really what I'm looking for is this lower one here around 120. That's that pivot low. That's that pivot low. And it actually goes all the way back here as well. So there's a lot of support around that 120 level. Now, granted, we hit it once and twice, so it's a little weaker of a level. But if it does flush down there, I'd still be a buyer since 2 hits. Usually you'll still bounce on the third hit. It's once you get to 4 and 5 that you want to be very, very careful. There's 2 cents of really good information right there in terms of hits of trend lines. Gold today bouncing up a little bit, right? So gold is moving up. That's okay. Overall, it's still bearish. What we could do is draw a parallel right here, and you're essentially got the wide range bar, and you're chopping there. We know that pattern. Every day we cover that pattern here in the game plan. That's still net bearish. Now, if we see more instability globally, is it possible that you start trading above that? Yes, and then that negates the bearish pattern, and the bullish probabilities take over. But as long as we're in this move, you would give it a B minus, which is, again, bearish, which means negative in terms of the bias there for probabilities. Next up, silver, guys. Silver's getting a small bounce. It's been following this channel beautifully. We do have this pinpoint level right here, though, that I am interested to see how it plays right there. So it's around 28.50. I'm going to watch it today to see if we flush into it. We'll see how it goes. But right now, again, beautiful little sideways downsloping consolidation. The question I have is, to me, it's not a matter of is silver going to go and make a new high. It is going to make a new high, right? At least according to probabilities in the charts. The question is, how low does it get before that next bullish run goes? So that's something that we're going to pay attention to, and I will update, obviously, in the commodity service, Smart Money Commodities and Miners. I'm always on top of it. 2 videos every single day, chart posts every single day, trade alerts, you name it. all for those of you that love your commodities. And by the way, we cover uranium, we cover all of these things. I mean, lithium, you name it. We're covering it all, including wheat and corn, plus the other commodities. We are seeing oil move higher today. So oil is moving higher. I'm looking at a potential move up into this line here. We can see again how that line starts all the way back here. Easy technical trend line to follow. Should oil get up here, it becomes a strong shortable opportunity. Now, interestingly enough, I actually thought we would have turned down already. We didn't. Doesn't mean we won't yet, but one of the interesting things I was looking up, and I even talked about this on Market Mavericks with Mike McGlone yesterday and Scott Melker, is that the hedge funds are heavily short oil. And so that means there's very little chance that oil's going to turn down right now. It probably needs to get some of those shorts out on oil first from the hedge funds. Once some of them are out, then it can turn back down. Just a weird way it works, folks. When too many players are on one side, it makes it very hard for price to actually go in that direction. All right, by the way, that's one of the reasons why GameStop, once it got in the 50s, 60s ranges and so on, it was very hard for it to keep going up. There were way too many people on the long side, and there weren't enough buyers left to go on the long side. So it had to flush out, get some of those, wipe out some of those players, then it can start maybe moving up again, although I think generally I'm still anticipating further downside on GameStop. Next up and last up, we're going to go to Nat Gas here. Nat Gas had a nice pullback yesterday. It's pausing today. We're going to keep an eye on this, but ultimately, again, I'm still anticipating a little bit more downside on Nat Gas. I'm more curious, are we forming some sort of cup and handle pattern? It's not the ideal cup and handle to make a higher high than here, be honest, but again, maybe if we continue something like that, maybe it would start to put in a more bullish pattern. But in any case, folks, holy cow, what a morning. I didn't really come in here expecting, or when I woke up this morning, expecting that it would be kind of Japan stuff going on and then France and then the volatility. It may turn out to be a dead day, like I said, meaning if NVIDIA can hold up and be up $1, $2, $3, if Apple stabilizes, they might be able to control this market. But if they can't, if we start to see those come down, then volatility will continue to spike, and it's going to get crazy out there. And one thing I learned, guys, and I learned this from 1999 to 2007, all the way to COVID and now, is that when things seem the calmest, that's when things are about to get crazy. I'm going to be here the whole time through, though, guiding you guys as best I can. Have a good one. Thank you for tuning in. I'll see you Monday morning. Now, let's go trade. Take care.